Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock and how it's recently been downgraded by some analysts, but upgraded by others. Then we will discuss why the PLTR stock is crashing right now and what to expect for its future stock price. After that, we will go over Palantir's plan for cryptocurrencies and blockchain technology, and why Cathie Wood of Ark Invest has bought up some more PLTR shares. Lastly, we will go over some Rivian stock news and how I am personally playing the RIVN stock price after its IPO. Go and press the like button right now for more PLTR stock news updates. Comment down below your personal Palantir stock price predictions. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. As you probably know, Palantir had their Q3 earnings report recently where they brought in an adjusted 4 cents per share, which matched their EPS projection, and they brought in revenues of $392 million for the quarter, which beat expectations by $7 million. However, analysts are still worried that Palantir relies too heavily on government contracts, which made up 56% of their total sales, while its commercial business continues to try to scale upwards. Analysts are also worried about how the PLTR stock trades at more than 30 times their forecasted 2022 sales when some of their defensive competitors only trade at 0.7 to 1.3 times their future sales. But with that being said, I still think Palantir is a great company with amazing technology. Since its earnings report, the PLTR stock has trended downwards because people are taking profits as the market reassesses the company's valuation. This bearish momentum from investors has been echoed by analysts who have lowered their PLTR stock price targets. For example, a Citi analyst has an $18 price target on the stock, which is pretty low, and another analyst from Wolf Research actually lowered his Palantir stock price prediction from $25 down to $20 due to their most recent earnings report. But he did add that he still anticipates that the stock will keep up mostly with its peers. On the other hand, we have a Morgan Stanley analyst who boosted his PLTR stock price target from $22 to $24 because the company beat their revenue estimate by over 30%. So the company is more than on track to what management has promised investors so far in terms of revenue growth. Despite this price upgrade, other analysts have turned more bearish on the company even after they exceeded expectations on their earnings report. For instance, an RBC analyst lowered his PLTR stock price prediction from $25 per share down to $19, and he says that the stock is likely to underperform the market. The analyst goes on to say that Palantir now has made him question its ability to achieve a 30% revenue growth rate until 2025, and that Palantir should not lean on their SPAC investments to provide the extra boost of revenues for an earnings report beat. So we have a mixed basket of what analysts think of PLTR, which is not new, but most analysts seem to be bearish at the moment. Also, in Palantir's earnings call, there was a quote from Palantir's chief operating officer that said that Palantir's Foundry software platform will be a massive accelerant for crypto companies. And he said that Palantir Technologies is open to taking cryptocurrencies as payment for their services, which should really get investors excited. Apparently, Palantir says that its technology is the perfect fit for cryptocurrency companies that need industrialized compliance solutions, which is not surprising because Palantir is already providing the service to a blockchain analytics company named Elementis, which is a part of Palantir's Foundry for Builders program. We also have to remember that Elementis is aiming to be a company the size of Google one day, and that it has multiple Palantir alumni who used to work for Palantir who now work for this crypto firm. As the adoption for cryptocurrencies and blockchain technology increases, Palantir is setting themselves up to take full advantage of this trend. Another cryptocurrency advocate is Cathie Wood of Ark Invest, who recently bought up around 1.48 million PLTR shares worth close to $36 million. After Palantir's stock pulled back, Cathie Wood pounced on the opportunity to buy more of these shares at a discount. As we see from the slide on screen, Cathie Wood of Ark Invest bought up and added 854,742 shares of Palantir to her ARKK ETF. We can also see that Cathie Wood added Palantir to some of her other ETFs by adding 222,350 shares to her ARKW ETF, 116,335 shares to her ARKQ ETF, and 290,548 shares to her ARKG ETF, which is the ETF that I think could possibly be the best ETF that Ark has at the moment. More good news is that Palantir's fair value estimate has increased again. The fair value estimate by Morningstar analysts used to be $24 per share, then it was upgraded to $28 per share before Palantir's Q3 earnings report, but after the earnings report, it now sits at $31. This upgrade is due to Palantir delivering more revenues than promised. This puts Palantir on a great growth trajectory, which means that $31 is the price that Palantir stock should be trading at right now. This new growth trajectory is also backed by how Palantir landed 34 new customers in the quarter, which brings their client base up to around 203. On top of that, their commercial deal value grew over 100% year over year to a worth of $2.2 billion, and their total remaining deal value is $3.6 billion, which is fantastic news. Plus, we also have to account for any new contracts that Palantir will gain and any government backlogs that they have. This makes PLTR a nice long-term play because by the time the backlogs and the deal values are depleted, their commercial business could be a matured segment of their company, and it's going to bring in similar, if not more, than their government contracts in terms of revenue. Now let's talk about the Rivian IPO, ticker symbol RIVN, which is up around 29% right now. The stock was originally priced at $78 per share, but now it trades at around $105. But after a few weeks of surges or drops, I suspect that we could get this stock for a cheaper price if you did not get in on it on the IPO. If you didn't know, Rivian is an electric vehicle company that focuses on electric delivery vehicles, electric trucks, and electric SUVs along with charging stations. This company has an implied valuation of around $80 billion to $100 billion, which means that this company could be worth more than Ford, which is $77 billion, General Motors at $86 billion, but not Tesla, because Tesla is a $1 trillion company. This company also has a lot of institutional backing from big names such as T. Rowe Price and BlackRock, along with Amazon, who owns around 20% of the company, and Ford, who owns around 12%. Amazon also has exclusive rights to Rivian's delivery vehicles for around 4 years. However, they also hold the right to dismiss their $100,000 electric delivery vehicle order from Rivian. Rivian also expects to deliver 10,000 of these electric vehicles to Amazon sometime next year. But besides Rivian's impressive electric delivery vehicles that Amazon wants, they also have a fully electric pickup truck called the R1T, as well as a 7-seater SUV named the R1S. On the surface, Rivian looks good, but the only things we want to keep an eye out for is their production capacity to make the vehicles and how much market share they can obtain from existing competitors. Right now, Rivian has a production plant in Normal, Illinois that can produce 150,000 vehicles per year, where 65,000 of those will be trucks mixed with SUVs, while the remaining 85,000 will be the electric delivery vans. The company is also going to lose around $1.28 billion just this quarter, with revenues coming in at less than $1 million. So this company's survival will depend on their ability to scale their production, but investors think that they are more than capable of doing this. Also, Rivian has yet to produce a high number of vehicles so far, so their plans on how to scale production and navigate the global chip shortage is not clear as of yet. The good news is that Rivian has a backlog of pre-orders for their truck and SUV, which number 55,400, which are set to be delivered by the end of 2023. We also have to keep in mind that that's just the North American market, and the only real problem I have with Rivian at the moment is I want them to prove themselves before I decide to invest into them. I want their production numbers and their delivery numbers so I can see if they're increasing, how well they're scaling, and I'm also not sure about their charging station plan because they say that they're going to allocate many of their charging stations to be out of the way places and locations like state and national parks, which seems a little odd to me because I would want to focus placing my charging stations in cities or where they're going to be used the most, not in out of the way locations. However, I will keep an open mind to this, and as new information emerges, I'll be sure to keep you all up to date. The only other problem I can transparency is that Rivian only has around 6,274 employees right now, and they're getting sued. This lawsuit comes from one of its former executives who previously led Aston Martin's US operations. She says that she was wrongfully terminated and her concerns were dismissed about Rivian not being able to deliver what they promised to investors and customers alike. So this is a really large allegation. However, this could just be her getting back or trying to get back at the company for terminating her. But what do you all think? Comment your thoughts down below, like this video right now, subscribe if you are new, and I will see you in the next YT video.